How's everyone doing? Welcome to the channel. I'm Chad Anderson. That guy is Zach Jones. We're recording this on Wednesday, the 21st. And Zach and I, a lot of times, will have topics to go over kind of in the bank. We'll say, okay, well, this would be a good one for down the road. And we don't always talk current events because we describe, who to work with or how to read discount points or issues with appraisals or homeowners insurance or the loan process or realtor, things like that. Today is current events because this one was such a, is it a bombshell, Zach? Is it fair to call this a bombshell? I mean, the drastic discrepancy on top of it being 3 months, less than 3 months from the election. Like, does this count as a bombshell?
It's a bombshell. And what basically we're talking about is a revised numbers that are
we're
now
gonna get into the meat of it, but
they're now being absorbed by the market for reporting that was effective March of 23 to March of 24. It's August of 24.
Yeah.
So these are revised numbers that for an entire year, that's 6 months late. So that's please
It's a
proceed.
revision of the revision.
Bombshell works for me.
Okay. It's a revision of the revision because these things have been revised. What was it? I said on a Facebook video earlier this morning, I think 9 of the last 12 jobs reports have been revised to lower numbers.
At least.
Well, remember, we said there was a report that came out a couple of months ago that in Q4, BLS, the jobs numbers were showing 635-ish thousand new jobs. And when they actually did the revision, it was 117,000 for Q4. They were over 500,000 off on the number. And if you followed us, if you've watched any of the economic news and things like that, people have had this concern. People have had this concern of what's going on and are these numbers real? Because I put out the other day too that, Zach, my litmus test, and you have to be careful with it because sometimes your sphere, influences the litmus test. It's not completely fair.
Right.
I don't know anyone, though, that's been happy for a while. Meaning, like, everybody's stretched, they're stressed, they're maxed, they got credit card debt, groceries are higher, gas has been higher, just cost of everything has been higher. Inflation, of course, is the driving force of a lot of that. But I just don't know anyone that's been happy. And we keep getting told that everything's fine and that everything's great. But now you have this type of news and numbers that are this far off, and I'll let you run with it here. But I said on the video earlier today on my personal page that these numbers, I don't fault anyone for saying, oh, we said there were this many jobs and we were off by 50,000 for the whole year. I don't even know if 50,000 is an extraordinary number or if that's within reason. I do know that 818,000 jobs off is an enormous number. And I hate being conspiracy theorist on stuff, but I don't know what to call it. But I have a hard time believing that when you have that many smart individuals and running these things, that you're that far off. Like, that's like saying that you have $10,000 in your checking account and you really only have 1,500. Right. I don't know how your math is that bad, is my point.
Well, and Chad, the reason this is important, I mean, the BLS jobs report, BLS stands for the Bureau of Labor Statistics.
Yep. Thank you.
So these are people who, I mean, this is an entire government bureaucracy who's tasked with one thing, which is to track labor numbers. And so, like you said, there's always going to be a margin of error. Give me a plus or minus 2%, or plus or minus 5%. But these folks are so bad, possibility one, or so dishonest, possibility two, at what they do, that we're seeing these revisions. So, and I'm just making up numbers here, but it's not uncommon to see 300,000 jobs created in a month. And then about the time that the next month's numbers come out, and these numbers come out like 60 days in arrears. So they have a lot of time to collate information from the market. So 2 months later, they say, well, the jobs numbers 2 months ago, where we made 300,000 jobs in that 30-day period of time. And then 30 days later, they may revise that down to 160. So they're already, 30, 40, 50, and sometimes more than that percent off in their revisions within 30 days of publishing the report. But now we're looking back a year, 18 months for some of these months. And they're saying we got it wrong by almost 1,000,000. It's 818,000 jobs, 70,000 jobs a month.
Yeah.
It's unbelievably bad. And so why is all that important? Well, we've been in a very pressured economic situation where the Federal Reserve has used the only arrow in their quiver, which is to jack interest rates up beyond what we've seen in dozens of years, on the money that every citizen in the United States and every company in the United States is borrowing this money on this short-term Fed funds rate. They've jacked that up to a historic high, maybe not as high as it's ever been, but certainly is as high as it's been in the last 2 decades. And everybody's suffering for it. And so the idea was to get inflation under control and to cool the economy off. And yet, 18 months later, they say, oh, our jobs market is absolutely terrible. We've been telling you that it was awesome, and we've been charging everybody all this money and all this in these high interest rates. But that really, if we'd told the truth, we would have seen a cooler economy for the last 18 months. So our bad. Let's fold that into the market and let's keep on going. And it's, in my mind, it's criminal, because the entire country has been suffering with this. And you talk about people who are happy, and are people satisfied? Are people happy with where they are financially? My circle says no, and I may be in an isolated little echo chamber. But I've also noticed in the people that I've talked to, both clients and in my personal sphere, that are looking for jobs or that have lost a job, it has really been hard to find professional employment at a full-time permanent position. That's the other piece that they've been dishonest about with the jobs reports. And the numbers are in there, but nobody digs into the numbers and just talk. All you have to do is talk about what's in there, is how many. If they say, well, we finally wound up with 100,000 jobs this month, they don't talk about how many of those job creations were, number one, government jobs, which are not, that doesn't help the economy. That costs every taxpayer, and we take on greater debt to hire those people. But number two, how many of those jobs are part-time jobs? If you lose $100,000 or 100,000 jobs that are full-time, and you replace them with 100,000 part-time jobs, that's not an even trade. That's not indicative of a flat jobs market at all. So I think we've seen massive dishonesty or massive incompetence in the way that we've counted these jobs numbers, which are one of the primary indicators of a healthy economy and a primary measuring tool to look at inflation versus recession. A recessive economy is going to be measured in large part by the amount of jobs that are available for people to make money.
Yeah.
I get excited about it, man. I'm sorry, but
you're spot on. It's
this
really
was
frustrating.
completely, this part of it, going back to the bombshell, I completely didn't have any idea that they were going to issue a revision to jobs reports from March of 23 to March of 24. I mean, that was like out of my mind. I thought that we might see some revisions from March of 24 to present, something that happened in the last 4, 5, 6 months. I can see revisions coming. I anticipated those. Are they going to be as bad as this? I had no idea.
Yeah. It's just the other thing too, is that especially in our industry, I post every single week a graphic called key dates, and it breaks down what news is being announced every single day. And generally there's never news on Monday. Like, it's a slower news day. Tuesday, Wednesday, Thursday are the meatier days, sometimes Fridays, right? And so I post this out every week, and Zach and I and everybody else in the housing industry, we know what kind of impact rates, that these pieces of news, when they come out, can have on interest rates. And the frustrating part for us is when you go back and look, think about it this way. One thing that worked in our favor was in December when the Fed said, we're going to cut rates 6 or 7 times in 2024. It's August 21st. They haven't cut them once. But back in December when they announced that, rates bottomed out in that window of time. And all of a sudden, everybody was wanting to refinance, go purchase, grab an opportunity that presented itself. As that went away, because jobs numbers were getting better and better and better, and look how strong the economy is. The economy's too strong. We can't cut rates yet. It'll destroy everything. We can't cut rates because look at all the jobs and look at all the numbers here that are in our favor. If we cut rates, it's going to be a major problem. So, Zach, it's almost like the 6 or 7 cuts, if the jobs numbers were right, could have made sense and actually happened by now.
Right.
But here we are 9 months later with 0 cuts. Zero. Like 0. So, one quick second. So you go through all that, right? The market, every time these fake numbers come out, interest rates would shoot up. Like, there would be days where they say, I'm using hypothetical, I think it was January, right? 180,000 projected, and they came in at 350. Something stupid.
Right.
And we just all yelled BS. But the market, the mortgage market, reacted by rates going up 25, 30, 40, 50 basis points in a single week, sometimes a single day. Meaning, to put that in perspective, if you're buying getting a $400,000 loan, and somebody quoted you 6.5% with no discount points, then because of that news, the 6.5% now costs 50 basis points, which is the equivalent of $2,000. So because of fake news, you got charged $2,000.
Right.
When these revisions happen, though, you don't get the waterfall off. It's not like everything corrects itself to a 50 bip adjustment in the same week.
Right.
So, for example, just real quick live scenario, and I'll let you go back. I'm looking at it right this moment. This is just after lunch, Wednesday, August 21st. This will be posted on Thursday, the 22nd. Mortgage-backed securities today, after finding out 818,000 jobs were off, it's adjusted 12 basis points. 12 basis points.
So we don't get anything.
Doesn't match the initial news.
Right.
That's a big problem. That's also what's caused the delay and the stall of getting rates back down to where they could be.
Right.
But that's what we're dealing with.
And that's because it's so far in the past. And I agree, Chad. I think we'd be in a very different place if we'd had honest, good, integrated data through this whole thing.
Yeah.
I'm no fan of the Fed and the way that the Federal Reserve is set up. That I don't make any bones about that.
Yeah.
So I look at this from a little bit more sinister perspective. How much money do you think that the the banks, private industries that are the largest shareholders in the Federal Reserve, which is not federal. Remember, it's not a federal entity and it's not a bank.
Right.
The Fed governors are appointed by private corporations that stand to directly profit from high interest rates. How many billions / trillions of dollars have those banks benefited from these higher interest rates over the last, now we know, a full 18 months of terrible jobs numbers where they have reserved pulling down those interest rates that they jacked up to control inflation?
Yeah.
There's an immense amount of money and a lot of incentive for the Fed not to pull down rates, not only from a monetary policy perspective, but also from a cash in pocket perspective.
Yeah.
I just pulled up because I got curious as you were talking. Chad and I, look at as much market data as we can, and we pay money to subscribe to gurus who predict things, and we employ their services, and we get their emails, and we watch their videos every single day. Very educated loan originators. I pulled up one of the two people that I trust about rate predictions yesterday, the 15-day strategy. This is a lock strategy. Okay. So this guy every day publishes a lock strategy. Less than 15 days, 15 to 30 days, and 30 or more days. So covers all of the bases. If you're in contract right now and you don't have a loan locked and you're closing in 2 weeks, what should you do? Well, you just went into contract, it's 30 days. What should you do? You're doing a new construction that's longer than 30 days. What should you do? Yesterday, all of his little meters were lock. If you're 15 to 30, over 30, lock. There's nothing that's going on in the market with regard to the political season and the jobs reports and the Fed meeting in Jackson Hole this week and the September. We're just lock it. It's not worth the risk. Everything today, 24 hours later, cautiously float.
Yeah.
Which means it's all up for grabs. And this is literally this. I saw it on Bloomberg last night. This revision absolutely came out of the blue and nobody saw it coming. But it's interestingly enough, in the middle of the big Federal Reserve meeting, where the Federal Reserve banks from all around the world, all the global folks, come to Jackson Hole, Wyoming every year and discuss policy.
And here we are. Yeah. I do want to say this as well, because I think this gets a little overblown. If you are in a 10-day window of closing, 15-day window of closing, and you're happy with your rate, you're not truly, unless there's a major news event, going to lose big time one way or the other.
Right.
Yes, when I say rates are up, when mortgage-backed securities are up 12 basis points, which means rates are down 10 to 12 basis points, depending on your lender and how they're pricing and hedging and doing all the things behind the curtain. Essentially, go back to that $400,000 loan, and 10 basis points is $400 in cost. So if somebody quoted you 6.5 yesterday, 10 basis points, it means that rate should give you back $400 in lender credit today. Or if you did 6.375, that rate should cost $400 less today. And there may still be some additional cost to it because you went down in rate. So an eighth in cost is different from an eighth in rate. So people forget that sometimes, or just don't know it. Also, even if it did move an eighth, depending on your loan size, it could only be like $30 a month. Sometimes people think, oh, I missed out on an eighth or a quarter because I locked in, with 12 days before closing because we were running out of time. I really should have locked in 8 days. It's like stocks gambling. You're never going to quit and jump out at the highest high. Or I'm sorry, you're never going to sell at the highest high and buy at the lowest low. You're just not. It's something you got to figure out and what you're happy with and content with. So when we say the rates moving, again, you're not losing hundreds of dollars from day to day in terms of payment. You may lose a couple of $100, or it may cost slightly more, or it may cost slightly less, something like that. But your payment is not drastically changing. Right. It's just the cost. And if the cost goes up, then you can go up in rate to offset that cost that occurred. And again, you go up in rate. Well, it's $25 to offset in that scenario, around $25 to offset the cost increase at the lower rate. So that's like getting really in the weeds. But I think sometimes people, consumers that is, Zach and I stress about it because we could have anywhere from 5 to 10 to 20 people we're constantly talking to, locking, floating, closing, pre-approving. All these things are constantly happening. So we're watching it every day because those swings and trends could help make decisions. It could, over a longer period of time, if there's a trend, save people $100, $150 a month, things like that. Especially if you get in a rally, or if you get in a bad cycle and all of a sudden you're scrambling to lock in because you're bleeding money. But like Zach was saying, the guy happened to be wrong yesterday, but it is a good source. And again, just because of the small difference, it's not earth-shattering news. I mean, I'm not here to say, oh, that's not a lot of money. It can be. But when you're talking about hundreds of thousands of dollars and thousands of dollars in payment, it is a little bit on the smaller scale with these rate movements than what people kind of dramatize it to be.
Always do the math. Those changes are important. And honestly, Chad, I think about it. Sometimes I find myself stressing about locking on the right day with the right rate and the right discount points. My clients, much more than I would ever stress myself, because in my personal situation, when I'm doing personal transactions, like, I just know you absolutely cannot time the market. And no. I'm kind of a grab it and growl guy when it comes to rates. I like the rate today. I like the price on it. Okay, lock it up. And then I don't look at it again. I don't consider it. So right. All of these things are important. I think that the biggest issue for me in all of this is that we're just simply not getting good data. It's so incredibly important to just the average American family. If we got good data, we would all be in a better situation right now with our personal budgets. I bought gas yesterday at under $3 a gallon, and I was like, okay, this is good. This is good. Should it be under $2 a gallon? Possibly, with better energy policy. But that's a good thing. It's time to get a hold of these rates and to do this strategically and not be running so scared and running off of bad data. We need better management, period.
Yep. Yeah. I mean, it's crazy. I still don't know how I'll finish with this. Think about where you work. Think about if somebody asked you to give them numbers or a report with data, and imagine they discover you're this far off. You would be fired. Like, you would just simply be fired. That's all there is to it.
If you worked in a company and you were this bad off on such an important issue,
right? That's my point.
You would be called into the office and handed the box of your personal belongings. You wouldn't even be allowed to pack them up yourself. They'd be trying to scoot you out of the office so fast. It's unbelievable.
That would be one of those days like those, funny spoofs or commercials where you show up to work and the key card doesn't work. You can't get in the building.
Right.
Right. Yeah. And then somebody's in the lobby going, they're here. Line one. They're here. Yeah. Get somebody down here.
All your coworkers know, because it was such a terrible faux pas, and they're not even going in the same entrance to the building. They're all going around to the back employee entrance.
Yeah. Everybody's standing with their face pressed against the glass, looking out into the parking lot.
Right.
Yeah.
Right.
Oh man. All right. Well, if you got any further questions or you have comments, your own opinions, DM us, drop a comment, whatever it is. My info right here, Zach's info right over there. This is one I actually got a couple of text messages about it last night. One person said, "Can't wait to see your video on this tomorrow." And I didn't know what they were talking about. I
Right.
started looking it up. I'm like, oh my God, this is going to be crazy. So I love to hear that stuff and hear from you guys. But also help us out on the channels, YouTube, Instagram, Facebook. Like, subscribe, hit the bell, share, whatever you can do. We appreciate that as well. For Zach, I'm Chad. We don't lie to you as much as they do. And hope you have a great rest of the week. Catch you later.
Thanks, guys.